Hello and welcome back to goldstocktrades.com. Today we have a new and special guest with us, Ravi Sood. Ravi is chairman of Galane Gold, a producer in Botswana. Galane can be traded as GG on the TSX Venture. Thanks, Ravi, for being here with us today.
Chev, it's my pleasure.
Ravi, it's rare to find an undervalued gold producer in a mining stable jurisdiction as a junior mining investor. Talk to us about the uniqueness of Galane Gold and its gold producing Mupane gold project.
Well, there's a few key aspects to understand. First of all, our jurisdiction. We're in Botswana. Yes, we're in Africa, but Botswana is a complete outlier on the continent. It's ranked number 7 by the Fraser Institute in terms of ease of doing business in the mining industry, i.e. it's the 7th best place to be in mining in the world. And certainly I can speak from firsthand experience. That is absolutely the case. We've got excellent infrastructure, roads, grid power, government-provided water, and our 30-minute drive from an international airport that itself is only just over an hour flight from Johannesburg. So there is nothing more we could ask for from the jurisdiction. Corruption, next to nothing. Safety is not a concern, and we have many other mining companies around us, most notably the global headquarters for Debeer's and several of Debeer's largest mines within driving distance of our mine. And that's important because that means there's a lot of mining services and secondary things around us that are very important to functioning as a mining company. Forcing people to work in Botswana is not an issue at all. It's a very favorable place to live and very attractive for many mining professionals since they are so close to major cities and an international airport. The other key thing to understand about our operation is we're in production. It's the company has produced gold since December 2005. It's through construction, it's through development, it's through commissioning, it's through all the growing pains, and we're in a very stable position now as an ongoing gold producer of about 50,000 ounces a year.
Ravi, Galane is undervalued compared to its African gold mining producing junior mining peers and also TSX Venture. We saw 2013 to be a challenging year. Can you talk to us about some of those challenges that you guys have had to face and why now you may be able to overcome some of those challenges?
Yes, and I think it's important to address that in terms of how we got to this valuation and how we're really in a transition period, which is a very interesting period from an investor perspective. We took over the operation from Iamgold 3 years ago. Iamgold is a great company. It's great people and several world-class assets. This was too small for them and was not as actively managed as it needed to be. So it's a very good deal for them to put it in the hands of a more nimble company solely focused on optimizing and maximizing value from this operation. It took us a few years to effect the changes that we needed to make. And 2013 dealt us a new challenge with the dramatic drop in gold price. So we spent much of 2013, certainly the first half, reacting to that and making sure that our operation was sustainable and, in fact, profitable, even at a much lower gold price. And it involved a number of changes, but we're through that. And at this point, we present a picture to ourselves, to investors, of a company that has a strong balance sheet, market cap that is not much more than its current cash position. He had a production profile in front of it with a very compelling cost structure and substantial free cash flow generation immediately in front of us. And so, again, not subject to construction risk and delays and timing, permitting, that sort of thing. We're in production. We're producing gold every day. And we're generating profits and substantial cash flow. So looking 1 year out, 50,000 ounces all in costs between $1,000 and $1,100 an ounce, at $1,300 gold, we'd be producing substantial free cash flow for investors next year and every year beyond, and very compelling when you look at our current market cap.
Ravi, talk to us about some of the technical initiatives that you're working on at the at the Mupane Gold project to bring costs down and to increase revenue.
Well, we've been continuously implementing best practices and rather modest but important capital expenditures over the last 3 years. Most recently and most significantly, commissioning a new screening plant. We were able to do this for probably between 10 to 20% the cost of that it would normally cost to implement such a plant by buying equipment from a nearby mine that was in wind down mode. And through the skill of our management team on site. That's an important but small investment, and one that opens up lower grade ores, some of our sub-grade ore stockpiles, which we can now upgrade and send to our mill and do so on a very profitable basis. Other changes we've made around the mill include implementing process automation software, making various improvements on the mining side, really focusing on recoveries and maximizing gold output. All quite modest investments, but important ones, what you could call low-hanging fruit. We expect to continue making those kind of investments. We plan to operate this mining operation, the mill, for a very long time. And so there's very good payback for investors for us to continue to invest in the efficiencies of our operation. I think another key efficiency that we've implemented is on headcount. We've reduced the headcount of the operation by 50% since we've taken over, and at the same time not lost any outputs, and therefore increased the efficiency and profitability of the operation quite substantially.
Ravi, you're planning to produce 50,000 ounces of gold a year. How is Galane positioned to provide investors with leverage to a rising gold price?
Well, I think that's where we're really well suited, Jeb. We've as an investor, you don't need to own any small cap stock. There's a lot to choose from, and but if you do have a view on gold, as an investor myself and a former fund manager, I'd say that there's two things that I'd look for. One is what's my downside situation? Is this company extremely exposed? And then what's my upside situation? From the downside perspective, we've got a strong balance sheet, almost as much cash as our market cap. And we're sustainable even at $1,200, $1,100, even $1,000 gold at this point. So we do have some flexibility to survive and come out the other end, even if there's another dip in gold price. More importantly, what's the upside scenario? And the upside, yes, we have exploration upside for sure, brownfield and greenfield. But in the short term, if gold starts to move, when gold starts to move, that immediately translates to results for us because we are a producer and we have huge operating leverage. Every $100 on gold price translates to roughly $5 million of additional operating cash flow for us. And let's say you put a 5 times multiple on that, that's $25 million of value. And that compares to a market cap that's currently $13 million. So you're getting 2 times our market cap in value for every $100 move in gold price. So huge operating leverage to the upside. So I think we present a very compelling picture on both the downside and upside scenarios.
So Ravi, as we can conclude, talk to us about some of your goals, 2014, 2015, and some of the new people that you've brought on board that are going to help implement some of those goals.
The key thing for us is our valuation. So in 2013, adjusting to lower gold price, we completely de-emphasized marketing, any sort of expenditure that was not absolutely critical. And we were determined not to dilute our shares, so very important to preserving shareholder value. We succeeded, but we were very quiet on the capital market side. So for probably over a year, we didn't do a single investor presentation. And the downside of that was it was just reflected in our valuation. So I think there's a huge opportunity for us to focus on that. It's very important that we do. because looking into 2015 as a much more stable company with a very profitable production profile, we'd like our stock to reflect that. And as a single asset company, we've got a great core operation, but it's inherently limited. To really go to the next level of value creation for investors, we either have to merge or sell ourselves to somebody and become part of a larger company, or become the buyer ourselves. And neither is possible, at least not on an optimum basis, unless our shares are reflecting most, if not all, of the underlying value of our current operation. And we have a long way to go for that. For example, if we were approached by somebody now to acquire a company, I wouldn't be comfortable talking about selling it at a 100% premium or even a 200% premium. It would be a disservice to shareholders. So we have a lot of work to do on the investor awareness front, and that's a key objective for the next 12 months.
Ravi Sud, chairman of Galane Gold, which could be traded as GG on the TSX Venture. Thanks so much for being here with us today and for giving us an introduction into your company.
Thank you, Jeb. It's been my pleasure.